we must deliver value in excess of our client's budget. We are not an inexpensive engagement. Somebody who's going to make that kind of investment expects us to deliver value in multiples beyond their investment in us.
Welcome to our middle market moment, where we speak with other professionals who help business owners build value, de-risk their companies, and prepare both personally and professionally to do the deal of a lifetime through M&A. Today, I want to welcome Nick Anderson. Nick is the Chief Executive Officer at One Accord. And One Accord knows that your business is unique, and so are your goals. So they offer a variety of services to get you and your business where you want it to be. They follow 3 basic steps: assessment, planning, and execution. They conduct a delivery diagnostic where they determine where your business is now. They do a planning phase based on what defines success for you and what it'll take to achieve that success. And that's where the execution phase comes in. They help you implement and plan and provide the support you need to succeed long term. So, Nick, welcome to the show.
Thanks so much. Thanks so much, Craig.
I've been looking forward to today's discussion. We've known your firm for a long time. I'm actually an alumni of One Accord, and we've had some of your other colleagues on the show in the past. And so you're the new CEO. So tell us from your perspective, what is One Accord and what does your firm do?
The short answer to what we do is that owners of companies have trusted us for a quarter century to make their companies more valuable. And I offer that. People say, well, what do you do at One Accord? And I say, we make companies more valuable. And they say, okay, that's cute. But how do you do that? How do you do that? And through your introduction, you went through, kind of step by step in our phases. We would be classified as a consulting organization, a consulting firm. But our approach is different, I would say, than what folks expect from consultants. There's an element of what we do that looks like, let's analyze your company. Let's provide some feedback and some thought leadership. Let's, write the playbook, give you the binder, and and call it a day, which is, I think, what a lot of folks imagine consultants do. Where we differentiate is in kind of the next phase. We actually are a team of operators, folks that have been successful in growing companies, turning around, taking companies through exit. And so we deploy our folks alongside and even inside of companies to get those companies where the owners want them to be.
Yeah, terrific. And you know what? I imagine, and I don't know if you've ever gone through this exercise, but you have a long career in banking, and part of that skill set in directing One Accord is you've seen hundreds and hundreds of companies, and you're able to kind of figure out which companies are valuable over time. Maybe share a little bit of your background just so that folks can understand kind of your point of view as you look at value.
You bet. 25 years in the banking industry. I started as a part-time teller for a local bank here in the Seattle area called C First. It was Seattle First National Bank. Was actually owned by Bank of America. So I stayed with C First as it went through a name change to B of A. And then over the next 17 years, worked for a variety of regional and West Coast banks. And like you say, hundreds of companies, organizations, large and small. I found myself in a space in the commercial bank where I would pursue lending relationships that were perhaps the most difficult, and things that you and I would see now in our career. That'd be private equity backed, non-recourse, even lending to nonprofits, some of the most challenging credit deals to put together. In the banking industry, we refer to this affectionately as a big airball on the, if we're lending against future cash flows and there's a collateral shortfall, and, we're trying to finance goodwill or, some senior debt component to a, multi-layered financing transaction. and so understanding the risk profile, not only of the company, but its management team, the operators, uh, whom it is that will be leading the company post transition, um, their expertise, their track record, all of these things became important in underwriting and financing the bank side, the bank debt side of a transaction. So um, there's a few other things that I did in the banking world. I was head of a retail division. I ran marketing for a community bank. Was a director of a commercial payments division. So I would say the life of a dollar through a company, from revenue to expense and everything in between, was an area of the bank that I managed, all the digital banking technologies and so forth. So um, I enjoy the business of business a great deal. And here again, for 25 years, owners of companies have trusted One Accord to walk alongside and help them achieve the goals that they want for their companies and for their life. And for those 25 years, I was working in banks, effectively doing the same thing as a financing partner. So I'm really, really happy to be here now.
Yeah, that's terrific. And as it relates to value, I know you and the various people and specialists on your team kind of leverage their past operating experience, banking experience, I mean the whole nine yards. How does your team come together to help those entrepreneurs create more valuable companies? Do you have any thoughts or stories behind that?
Yeah, I do. There's the I like to use the imagery of a dartboard. It makes sense in my mind. If we can imagine the little red dot in the center of a dartboard, that would be our ideal client, our ideal engagement. Uh, and as I speak about this, folks will say in response, "Okay, well, I understand that, but what about I'm kind of in that green circle around the red dot, or I'm in one of those numbers kind of farther out on the periphery. Can you help? Can you help me?" And the answer is often yes. But if I focus in just on that little red dot, I tell the story of a guy named Bob, and Bob is not a real person, but he's probably a real person. I made the name up, but I know Bob so well that I could tell you where the hole is on his Carhartt jeans, and what color his Filson flannel is, and what year his F-350 is that he's been driving around. Bob is a really particular profile, um, and Bob started a company about 40 years ago when he was 27. He started making parts in his garage, and his little machining practice that he was independently responsible for grew, and he added some employees and added some employees and took on a facility and grew and grew, and here we are 40 years later, and Bob has a really meaningful manufacturing company, and maybe Bob does 35 or 45 or 65 million in sales annually 45 years later. um, but Bob also has a place in Palm Springs and a couple of grandkids, and he'll tell the people closest to him he doesn't see either of them enough, and it's time for him to sell. And Bob likes to play golf, and all the buddies of his at his golf club are selling their companies and spending more and more time down in the desert, they would say. And so Bob has a sense of what his company should be worth if he takes it to market. He goes to see you, and he says, "Craig, I got this great company and I'm ready to sell." And Craig says, "Okay, let's take a look." And there are about 9 things that we could articulate. I don't know that I could recite all of them off the top of my head right now. We're knee deep in a research report on this that I'm looking forward to publishing pretty soon. But atop that list is owner dependence. So you get to talking with Bob, and Bob knows every one of the customers, and they love him, and he loves them. They're like family. That's great. And there's some risk there. And Bob's sister-in-law has been running the books for the company, and she's the inside accountant, the controller. They don't have a paid CFO. Never needed one. The business isn't that complicated. Um, it's got a nephew that's kind of head of operations, but isn't isn't necessarily the president of the company or general manager just yet, but he's been running the shop and doing a good job, right? And and what we start to see here is that there's a real opportunity um, to to professionalize the organization. And and so when I'm just going to pause when I say that, because now I'm talking to Bob about his company that he started, that he grew, that he, I mean, the blood and the sweat and the tears, the late nights, the missed payroll, the he had to drain his kid's college savings account to keep the company alive. He had to mortgage his house. He risked it all. He had to lay people off. And he employs his family, and it's a beautiful thing. And it creates some risk. And we look at some of the systems. They manage the company with Microsoft Excel, and it makes sense and it works for them, and that's good. But for the buyer, for the company, that's whether it's strategic or financial or whomever it is, right? There's some risk there. Bob's got all those personal relationships with the customers, and he doesn't necessarily know if they're all profitable, and and maybe they aren't. So I say Bob is the ideal client for us, and he is the most difficult person to sell to, if I'm going to use that language, because in order for us to deliver to Bob the results that he wants, we have to engage in a very um, honest and compassionate conversation. We operate on three values: truth, compassion, and service. So we've got to tell Bob the truth compassionately, and we show up to serve. Uh, it's a real challenge because Bob built the company, and he's done something that not many people in the world have. I don't know what the statistics are necessarily, but how many companies exceed $10 million in revenue? Like, actually, it's a single digit at best, and he did it. And uh, and here we come, the consultants with all of our ideas and thoughts, and um, but we offer our insights and our feedback. And when those owners have felt like they can trust us, we have delivered some exceptional results. In 25 years, we've worked with more than 600 companies, um, from startup to, we've worked with some of the largest companies in the U.S. Most of our clients exist between the 25 and $100 million in revenue space. And we've got some really neat stories to tell about those times when Bob says, "Yeah, come on in, let's do this together." Um,
Yeah, that's I know a lot of Bobs, and I'm with you. Captains of industry, they bleed their business and their industry. They know it like nobody else. Maybe tell me a little bit of, so Bob has to take a leap of faith and say, all right, my company is worth X, and an iBanker has told me it's worth within this range.
yeah,
But if that's not his ambition, or he thinks it's not enough, how do you, tactically, maybe getting in the weeds a little bit, how do you work with Bob? And I think we talked about the three phases just up front, but how do you kind of peel back that onion delicately and maybe craft a vision for Bob of what his company could be worth within a reasonable time frame if he turns some dials and some knobs or makes a few key hires on the way to an exit? Maybe give us a little insight on how you guys approach that.
yeah. Listen, the entrepreneurs, the folks that have achieved 25, 50, 75, $100 million in sales, and these are smart people. They're hardworking, smart, intuitive. They've figured something out. So uh, most of the time, we're not telling Bob something that he doesn't know. He knows it already. It's also, human nature that uh, a person like that wants to do it on their own. They're an entrepreneur for a reason, right? The calling on their life is to do things, they're the Frank Sinatras of of commercial business, right? I'm going to do it my way, and they've been successful. But they know. So our first phase of diligence is perhaps the most important, where we understand, and in a short amount of time we try to understand the business at the deepest level possible, but also I'd say the quality of our work is reflected in the quality of the questions that we ask. That Bob will know that we know what we're doing because we ask questions that make sense, because the folks that are on our team have been there and done that. We're asking questions that are one or two steps ahead of where the company currently is. Bob intuitively knows this. He understands, he can connect in with that. And in that kind of phase, we're building rapport. We're building the trust. So when we then share our recommendations, it's it's the criticism of consultants, I would say, is, yeah, I spent a bunch of money and I spent a bunch of time and they didn't tell me anything I didn't know already. And so then I, respectfully say, okay, then why haven't you done it yet? Well, I wasn't ready. It isn't the time. It isn't. And I get that. I appreciate that. So that's what we're here to do, is to help you do the thing that you need to do, that maybe you didn't have the resources for, you didn't have that partner that's been there, done that you could trust, and we're here to do it together. So uh, the the first phase of our engagement either makes or breaks the opportunity for us to continue working with someone in that second phase. Either we earn the trust or we don't. And our track record is such that about 70% of our engagements move from phase one into phase two. Um, and the other 30%, from my experience, if we're still talking about Bob says, hey, listen, I get it. I agree with what you're saying here. I can handle it. I can do it on my own. Thanks for validating what I thought. Um, and we can do this.
Yeah, it's my experience that probably 5% of that 30% can actually do it themselves. Most need help, but that's another show, I think.
Yeah, I mean, I'm in this space where I look up to entrepreneurs. I admire and respect, um, and it's with a lot of humility that I would go into. It's like, you go into someone's home, and you say, I might put the couch over here. There's a little better flow in the room, but it's their home, and um, but maybe if we did move the couch, it would be more comfortable. we'll, we'll see. We'll see.
I think one of the things that I picked up on, and it's so true, there's this old saying that 50% of the value in your company is what you've built, all the good things, right? All the revenue,
Mm,
the team, and all of that. But the other 50% of the value is in the ability of those things to continue, the revenue, the team, the customer base, right?
yep.
In essence, and you use the word risk, right?
Yeah.
In terms of identifying the risks and de-risking. And for somebody who deals with private equity and strategic buyers all day, the first rule of private equity is don't lose money.
Yeah.
So it's a risk averse kind of look at a company. Everyone can fall in love with the story, and Bob's amazing, and everybody in the industry knows him. But every company has inherent risks, whether it be owner dependence, whether it be a single revenue source, responsible for 40% of the revenue. I mean, the list goes on.
Yeah.
So when and Bob, by nature, it seems to me, in my experience, and having been a serial entrepreneur myself, we are optimists by nature. Otherwise, we wouldn't do this crazy work,
Have to be. You have to be.
engaging
Yeah.
in risk. But professional buyers, and there's more of them out there today looking for lower middle market companies, the first thing they look at is the risk profile.
Hmm.
Maybe share with us a couple of things, and this might lead to kind of the phase two of the engagement, but how do you help companies de-risk, thus making them more valuable?
Yeah. Here again, if I could articulate all 9 points, but there's owner dependence, there's revenue concentration, there's supplier concentration, there's um, uh, you know IT and kind of this technology risk that's quality of financials. So we would look at all areas where there is risk. It's and here again, like you say, it's not a question of is there or isn't there. It's more a question of how much or how little. And so we would just go after the areas of greatest risk. Um, if that is a revenue concentration or if it's a supplier concentration, then we could address diversification of sales channels or exploring, alternatives, backups, uh, to suppliers. If there's operational risk or maybe key man risk, one of the things that we let's take it this way: that the enterprise value of a company is often expressed in a very simple equation. We all know this. It's, EBITDA times X, and you get your number. That multiple is where we focus most of our energy. So we might be able to move the dial on revenue. We might be able to move the dial on expense. Therefore, if we do both of those in the right direction, EBITDA, right? But if we can do things to increase the multiple, professionalizing the organization, well, how about this? If we can install an interim, and really clearly an interim leader, someone in the CEO seat of the company, to demonstrate that this company can operate without Bob and his relationships, we have materially demonstrated uh, a, a de-risk. We've demonstrated that the company is lower risk than a heavily owner dependent company, which then means Bob can often receive a full cash offer as compared to some kind of an earnout or some kind of a tail, or it means a better deal. So here's a real example, and I'll enter in uh, another risk that is very real, and one that's really really sensitive, and it's relational, it's leadership, it's family business, right? um, I gave the example, Bob's sister-in-law and nephew are in the company, but what about a company that's owned by brothers or sisters or cousins or multi-generation, right? If they don't all get along, if they're not all aligned, if they don't sit down at the table and tell the same story about where they've come from, where they're going, what they want, they're aligned, there's risk. Any buyer's gonna they're gonna feel it. They're gonna know it. So we worked with a company that received an offer they didn't like. They were offered $75 million for their company, 25 million in cash, 50 million in earnout based on performance criteria. Lots of risk inherent in the deal that showed up in the structure of the offer, which meant too much risk for the seller because 50 million bucks is on the line based on performance criteria that they may or may not have full control over. We worked with this organization about 2 years, and the end result was $100 million all cash offer. I think if I went in order of the most impactful changes, it had to do with putting someone in a role that was not a family member, in a leadership role, um, and then aligning the various family members in the objective. So we did those two things. We demonstrated the company could operate without family leadership, which is important to the buyer. And we also aligned family around the objectives, which made the transaction more palatable, didn't perceive, didn't show as much risk. And those things, perhaps they sound simple, but I'd say they're way more complicated than adding a new, sales channel or tightening up expenses, right?
For sure. Yeah.
Yeah.
Yeah, it's interesting, and as a student of the game,
Hmm.
you know, most business leaders, unless they've crested the corporate life cycle or even their leadership life cycle and they want to do something else and they've kind of abdicated their responsibility as a leader, most sellers are at the top of their game.
Yeah.
They ran a $20 million company, and then they ran a 25, and then they ran a 30, right? They're always like learning, right? They're always what works. And some of them have retreated a little bit. Maybe you have a bad year and you're now a $20 million company again. But for the most part, they're always at the top of their game. And when you mention professionalization, you don't know what you don't know. You don't know how $100 million CEO may operate a business with those kinds of complexities and other aspects to the business. So I love the part, your third phase relative to execution. You guys can come in having seen hundreds of companies, having been operators in lots of companies, and help them have a window into greater learning of what it's like to run a 50 or 100, or even to make their pro forma real or defensible, because most of them
Yeah.
are like, here's the keys, you take it from here. Well, no, we have to build something that will be compelling for the future, and that really puts you squarely in the execution side of it. And I think that's where your interim executive might
Yep.
as well, right? Being able to take them to that next level.
Yeah.
um,
If
tell us a little bit
the
more about
well, I think that just about every private equity firm that I've met, they have a team of operators. This is what they would call it. They've got a team of operators. Um, and my colleagues and my partners and I, outside of One Accord, not connected into our consulting business, but we have also invested in and purchased companies, and we leverage the One Accord operating team to help support us there. Um, so if the private equity guys have operators, why shouldn't the owners, right? Um, if the private equity guys are going to bring in someone who's run $100 million company to run a $50 million company and grow it to 100, why wouldn't an owner want to do that themselves? Rhetorical question. I think I know the answer. Like you said, they're at the top of their game. They've built it. They've learned. They're capable. Are they capable in the timeline that they want? There's a question there. But here's the thing: is for our clients, their company is their identity. For me, One Accord is my identity. This is who I am. It's an extension of me. Um, Being the CEO of One Accord is a part of who I am. So I know that it at that moment in the future when it's time for my partner and I to transition, or there's something occurring, that I'm going to have to face some internal questions there, in addition to who is it that's going to run the company into the future. Are they prepared? Can I hand over the keys? Am I comfortable with that? Where do I like, it's this is a very, very complicated engagement. Very complicated, very complex. It's not just about managing a P&L and a balance sheet, although those things are critically important. It's managing risk. It's understanding identity and having purpose. One of the things that I would love to do for every client that we engage with is link them up with some kind of life purpose work, so they can be clear about what's my life after this. What's that next season going to look like? And we work with an amazing network of professional service providers. You are one of them. And there are wealth managers, there are insurance providers, there are CPAs and lawyers that all come around the entrepreneur with a heart to serve that person and their family and their company. It's really a beautiful thing when there's an entire community coming around a person. We in fact we are introduced to our clients more often than they find us, in a Google search. They're introduced because they ask their lawyer, they ask their CPA, or they come to you and they say, Craig, I want to sell my company. And you say, okay, there's some work to do. And they say, well, what do you mean? And you say, well, go talk to the folks at One Accord. They'll take good care of you. So we've been really blessed with, you know, being introduced by trusted advisors. And so I'll digress. I go back a little, take a couple steps back. I get passionate about the experience of the owner, having, being one myself and an investor in other companies, understanding how challenging it is to accept bringing in someone else to run the company that I started, that I built. Now, I didn't start this company. I'm actually an example of us kind of taking our own medicine. My partner founded the company 25 years ago. Um, he hired a consultant. The consultant said it's time for you to um, bring in a CEO, and so I'm the succession plan here. I'm walking. I'm taking the medicine. We are taking the medicine internally here.
Yeah, outstanding. So tell me, maybe to wrap up, tell me a little bit about, it's clear that you guys kind of steward relationships really well and you honor what the entrepreneur has built while at the same time providing some really valuable advice and a roadmap and even an execution plan on how to get the owner where they want to be. Talk a little bit maybe about kind of your value promise, maybe to wrap that up so that as folks are finalizing and listening to this, how that can possibly resonate with them.
Yeah, thanks for asking that question. The line that my team hears from me regularly is that we must deliver value in excess of our client's budget. We must deliver value in excess of our client's budget. Um, we are not an inexpensive engagement. It's it's difficult for an owner with a company less than 10 million and really less than 25 million to justify the expense of bringing us on. Somebody who's going to make that kind of investment expects us to deliver value in multiples beyond their their investment in us. So the value proposition that we make companies more valuable is best demonstrated when we have our economics aligned. And so it is, if a company might be valued, if they sit down with you and you say, well, you're in a range, and that range might be 25 to 40 million on the outsides of, both ends of that. Okay. Uh, if that owner trusts us to work in their company and we see them through a sale and they sell for 50 million, so they've busted through the range because they've done some things that are pretty remarkable. um, well, if we can structure our compensation in a way that aligns with that additional value add, then I think we all feel a whole lot better about the investment that's been made, right? So I go back to, we must deliver value in excess of the budget. And the example I gave you earlier, the company that had an offer at 75, but really it was 25 because 50 million was an earnout. And a couple of years later, they received 100 million all cash. Um, that's easily a anywhere from a 10 to 30 times return on their investment working with us. That's that's what we're talking about.
I kind of, this image popped into my head of an insurance policy, right? If I said to someone, you can buy this insurance policy that would guarantee you get a $50 million sell price. Would you spend $1 million on the insurance policy to get the 50 million when it used to be 30, right?
Yeah.
So in a way, you guys are providing not only the de-risking or risk sharing, but you're providing a path to get there. So that's really powerful for sellers. And look, there's lots of companies that are going to try to go to market and they may not get there. And one of the
Yeah.
things we have to do is tell people you're not ready or you're not as valuable as you think you are, because we understand the market so well.
Yeah.
I think having a partner like you guys, that we can send those folks to and say, but if you have a heart for doing the hard work of rolling up
Yeah.
and doing that, One Accord's the place to go for that.
That's right. I like to think of Lady Liberty. Send us you're tired, you're poor, you're huddled. The folks that they the the ambition has been the dream just hasn't materialized, and so long as they haven't lost hope, right, then that dream still exists, right? It does take an owner to show up with humility, just as we do, just as we do. We have to be humble in our approach and hungry, humble and hungry, uh, willing to roll up our sleeves and do the work, and deliver that value that exceeds the budget. And if we can deliver on 10x multiples, to an investment every time, uh, well, that's a beautiful thing.
Yeah, absolutely. Well, thanks for joining us on the Middle Market Moment, Nick. Appreciate it. Let's tell the audience how they can get a hold of you and get a hold of One Accord.
Yeah, we have a .co URL, so it's One Accord, ONEACCORD .co, and from there, our website's pretty simple. There are contact us and outreach, um, but listen, we're also we're not a big firm. Uh, there's about 35 of us today, and so anybody that would want to contact me directly, they can call me 206-280-3439. That's my personal cell. I take a call from anybody that would be interested in having a conversation about increasing the enterprise value of their company, and really going after their dreams.
That's awesome, Nick. Well, thank you so much for investing the time today. And thanks to everyone listening, and good luck on your journey to the deal of a lifetime.